Hey traders, welcome to the monthly breakdown for August. July, we had a pretty accurate calls. We were looking for silver to rally, dollar to weaken, crypto to rally towards the end of the month, and I think we called for a rally in oil, which never came to be, but is still on the cards. And yeah, it was a pretty accurate call. So we're heading into August with some new calls, and we see how things play out. Basically, we're going to zoom out, see how things are looking, and give you a much better overview of what trades to look for heading into the new month. So starting with the dollar, as you know, we've been bearish the dollar, and it's a temporary bearishness basically, because what we're looking at is in terms of structure, we have this impulse, then we go into this triangular correction followed by another impulse. As you know, with structure, that's what we look for. We're calling this a lower degree correction. Then we're heading into another corrective phase where we have this impulse to the downside. We have a nice corrective B wave, nice and choppy, what we look for. And then we're looking for this nice impulse to the downside. And that's exactly what we've gotten. And we've now reached our minimum target level of this impulse. So this is an important area for us for the dollar. And it basically leaves us with a bit of caution as to where we're heading next. So I know some demark indicators, which are a very reliable indicator, have given us a buy signal for the dollar in this region. I'm not sold completely. I think it is a buy, but it is a temporary buy because we're going into correction for more downside. And I say so just because of what some of the other pairs and what some of the equities are showing us in terms of the path forward for the dollar. So keeping that in mind, we're going to delve into some of the other pairs and give you a good indication of where to from here, because it's basically a tale of two stories. It's a dollar strength story because we've reached our minimum and we're going to bounce from here, and it's a continued dollar weakness story because we're just going to correct here and carry on with the dollar weakness down towards our median and full targets, full target being around about 86, 85 on the DXY. So looking at the euro, we see we have that same structure that we're looking at with this impulse corrective price action of our B wave, perfect B wave, and impulse to the upside, which we're trading at the moment. And as you can see, we haven't quite met our minimum upside targets of kind of 1.198, sorry, on the euro. So we haven't really reached our minimums here, which means what I suspect is going to occur from this region on the lower time frames, on the dailies, is a fairly decent drawn out choppy correction and then continuation to the upside. As you know, we were trading this. We were looking for this to develop into more of a flat pattern before continuation to the upside, and we were trading this as a correction in the same time. And it just didn't come to be. It looks like it developed into more of a triangular pattern and broke out from that region. So as you can see, the impulse preceding it gives us a good indication of our full target, which we got to at around about 1.197, which, like we said, falls short of our minimum target level at 1.198. So I suspect what's going to occur now is a decent sized correction, maybe something similar to this, hopefully something more along the lines of a flat pattern that's more easily recognizable, and then continuation to the upside. If we look at a minimum target in terms of time, we can see it's going to be a fairly short correction that's required before more upside, but I think we're going to get a bit more of a drawn out correction given what some of the other pairs are showing us. So this is one of the reasons why I think we haven't quite met our full dollar weakness, and we're going to continue for more dollar weakness moving forward, following a little bit of a correction. Heading into the pound, same story. This is a different story in the fact that we've reached our minimum targets for the pound. Just zooming out, I'll show you exactly what we were looking for. We have this impulse up, we have this choppy corrective price action down with a nice expanding triangle in the middle, and then we have a move up off the lows, nice impulsive move that we've gotten. And we've reached our minimum target level of this 1.3 basically 1.31 level. So we're sitting on our minimum target level for the pound. But like I said, I don't think that's the end of the dollar weakness. I think we're just going to see a smaller correction on the pound, quite bullish the pound, but still maybe even just see a really small correction on this one, something similar to this, before a little bit more upside, up towards maybe 1.34, and then a bigger correction. So I'm a bit more bullish the pound than anything else at the moment. It's looking really good. But that's basically what we're looking for. And following that correction, like I said, I think we're going to see more upside moving forward. So obviously an important level has been reached, but I just don't see us turning here because of the general picture of the dollar. And obviously our next level we'll be looking at for the pound is this 0.135, 0.136 region, somewhere around there. Just going to copy this. So that's our next target for the pound. So we'll be keeping an eye on a decent sized correction and then more upside to follow. Moving on to the Aussie, a little bit of a mixed bag on the Aussie. As you can see, we've had a really nice impulse to the upside and we've gone into this corrective pattern. Bigger picture, we have really a tale of two stories. You have this impulse up, choppy corrective price action, and looking for an impulse up to the upside, if we look at it that way. Another option is to look at this as a choppy corrective A wave. And if that is the case, giving some measurement to it, we have reached a kind of area where we could see a pullback. That being said, looking at this as an A wave, I just think there's too much going on here as an A wave to be considered just an A wave. I think what we're looking at here is a correction by itself. We have an impulse up, we go into this kind of triangular pattern actually, and then we have a more impulse or a more complex C wave to the upside. So I'm looking at this as a complete correction and continuation to the downside, and then from here we've reached the bottom and we're heading higher, which means on the lower time frames what we're looking for is continuation to the upside. What we have is a nice impulse to the upside and we have a fairly drawn out correction, and what I'm looking for is this pullback to signify to us this is our C wave. The danger with this is that what we're looking at here is potentially just a small triangle correction and continuation to the upside. So we just need to keep an eye on that and see how things develop. So there's nothing really to be traded here, in my opinion, unless we see a decent looking entry on the lower time frames, because on the very low time frames like the hourly, it looks like we've had a running flat correction and then a push higher from here. So what we thought was the continuation to the downside of the higher degree C wave is potentially just a lower degree C wave, as you can see in this region here, for continuation to the upside. So we just have to be patient, see how things play out here. Even if this is just a push to the upside, I think it's just a temporary push before we get this big C wave to the downside. One reason for that is if you look at the length of this impulse preceding it, we might see this develop into a more longer drawn out correction, as you can see, and it'll be the correction of a right degree for us. So it might just be a long, choppy, drawn out B wave, then maybe a bit more of a choppy C wave, and all of this ends up being enough of a correction to be considered of the same degree of this impulse, and then our next move up is going to be along these lines. So that's something to look forward to if it plays out moving forward, because that will be an incredible trade for us. So just keeping an eye on the Aussie dollar, seeing what happens. New Zealand dollar, similar situation, just gone into this long drawn out corrective pattern for more impulse to, for more upside. The picture on the New Zealand is a little bit different, and it looks to me like we still have some more upside, but it's less capped. It's a bit more capped than the Aussie trade. So we're keeping an eye on this because this could be a reflection of what the Aussie dollar trade is. When I said this could all just be one full correction, it might just be the A wave that we were looking at, and the Aussie upside might be capped, but I don't see it. We'll have to keep an eye on it and see how things play out. So this is a bit of on the higher degree, it's a bit of a confusing situation, and we just need to get some clarity, and some clarity will come in time between the Aussie and the New Zealand. US dollar CAD, we have a really nice looking trade, both up and down. As you can see, the higher time frames, we have a very clean corrective price structure. We have this complex ABC A wave. We have a nice long drawn out, very complex B wave. And now we headed into the C wave structure that hasn't reached its minimum target at kind of 1.30. Zooming into the lower time frames, you see we have impulse, correction, impulse, and we've gone into this corrective structure. At least it looks like a very nice clean corrective structure for us, where we have this nice choppy A wave to the upside, we have a nice choppy B wave to the downside, and we're looking for this impulse to the upside as a C wave. Zooming in, you see what has occurred is we approached our region for a buy into this area, or at least to see a push higher, and we got this on the lower time frames with a really clean impulse to the upside. We then went into what looks to be a corrective structure, in my view. We can look at this to be a pretty decent flat pattern that could turn around from this region and push higher, and that's going to be our trade that we're looking for heading into this week. As you can see, fairly decent price action. What we're going to look for is an impulse to the upside, a small correction, maybe a flag, hourly flag, and then trade that to the upside. That would be a great trade for us. The alternative, which I currently have, is just an entry order above the highs with a stop loss below the lows, wherever they end up being. It kind of takes away the risk reward. So ideally, we want to look for a nice impulse up, a fairly decent correction, and then we can put an entry order above the highs, a much narrower stop. Obviously, a little bit more risky, but at the same time, the structure really calls for that risk to pay off moving forward. So US dollar CAD, definitely one to look for heading into this week. We're going to put that on our watch list. US dollar Swiss, similar situation. Zooming out to the dailies, you see we have a really strong impulse, and then this choppy corrective price action that we've been alluding to as a really good US dollar long trade moving forward. And what's happened on the lower time frames, as you can see, is a really strong impulse off the lows, and we're kind of heading into a bit of a corrective phase at the moment. So if this develops into a nice correction for us, then we definitely want to get long, because this has a really good risk reward for us. Just zooming back out, you see if you can get a good entry on this, the risk reward is going to be kind of at least 4, 5, 6 to 1, depending on the correction and where we can put our stop loss. So another one to keep an eye on for a long trade. US dollar yen, in a bit of a mixed bag, figuring out exactly what we're looking at, because we have this impulse down, we have this impulse up, and then we go into this corrective phase. What I suspect is what we're looking at is an impulse down, choppy corrective price action, and a secondary impulse down, which has become a bit more complex. Zooming in, you see we have an A wave, we have a fairly decent B wave. You have this impulse down, you go into this expanding triangle, and another impulse down. So now we're looking to trade this C wave to the upside, or we were looking, but as you can see on the lower time frames, it was just a straight line up and never really gave us an entry. So US dollar yen is a bit of a different story. We're not looking for the long to get long the US dollar. We're looking for the short. Looking at the Fibonacci's, we see we are tapping off on this kind of one-to-one target, but there's no real downside. It looks more corrective to me. So we might see another, just a push higher into this region, maybe up to the 1.618, turning into more of like an expanding running flat, if you want to call it that, before the downside. So we're looking for something in this region to get short moving forward, getting short the US dollar, getting long the yen, and that could have to do with some risk off trades moving forward. US dollar yuan, we're looking at an interesting trade here, not really to trade, but to just give an indication of what the dollar is going to be doing moving forward. And this is one of the ones that's pointing to some dollar strength moving forward. As you can see, we have this impulse up, and I think what we're going to be calling this is a triangle moving forward. A central B wave triangle of this larger degree running flat that we're looking at. We have this impulse down, impulse up, running triangle, impulse up, which will be the end of your B wave, ABC, and then a higher degree ABC moving forward. So another one that's indicating some US dollar weakness following this move. So just something to keep an eye on, not something really trade, just something to look at. Silver, obviously silver, we said we're going to look for long silver. We never really found an entry. Only the brave got into this one, and if you did, it paid off really well for you. We were hoping this was going to develop into more of a running flat for us. We were looking for another move down, which never perspired or never came to be, and we just got this really strong impulse up. So where to from here? Lower degree time frames. We are just seeing what develops here. If we can get a decent looking correction here, it's just offering us an opportunity to get long. So we'll be watching this as a corrective structure. We'll try to find some definition from it. And if we do, then we'll be looking to get long silver once again, because the higher time frames suggest what we're looking at is a kind of replication of this move to the upside back in 08 to 011, or back to 2011. So keeping an eye on this one. For more upside, we're just looking for a decent entry. Gold, expecting a pullback in gold. As you can see, we're kind of trading this structure to the upside, which paid off well for us for this long C of B wave. Let me just get rid of some of these structures here. Impulse down, impulse up, choppy corrected price action, impulse up. Now we're looking for this impulse down. Higher degree, we are at the end or close to the end of a much bigger structure. And I suspect following what's happening now, we're going to see a much bigger move down. That being said, this move down may only start from kind of 2,400, 2,600. It might just become a nice running flat before we see this move lower. So just something to keep in mind, that we're looking for a turn eventually down the road. When we zoom into the lower time frames, we see a potential correction and continuation to the upside. So it's basically a tale of time frames for gold. So starting from the highest time frame, at some point we want to see this big move to the downside as a correction, but that needs some time to play out, because when we go into the lower time frames, let's say the 8 hour, we're kind of still trading this lower degree running flat. Impulse, correction, impulse. We want to see an impulse down. This all turns into a running flat. Then we see a move higher, a correction, and then one more impulse to the upside. That being said, we can't really have this impulse to the downside just yet, because when we look at the really lower time frames, say the hourly, it looks like we're correcting for a little bit more downside. So it looks like we're going to get either a triangle, running triangle for more upside, or this is all going to develop into a nice running flat, then one last push up, maybe towards 2,000, maybe a little bit higher, then our 8 hour correction, then our continuation to the upside, and then our much bigger, higher degree correction to the downside. So lots to look out for. The upside trade at the moment is very low risk reward given how far we've come, but if you get a decent entry for the yellow, then it's worth taking and worth moving to break even and into profit fairly early on. Then the short is definitely worth looking for if we can find a good entry, because as you can see, the expected downside is from 2,000 down towards around about 1,750, maybe 1,800 on this one. Then the upside is a great looking trade. Upside continuation, because from 1,800 we're looking for a move up above 2,000 towards maybe 2,100, 2,200. We don't really have an upside target for that, but looking at the lower degree, it has potential to really get some legs if this is going to be our big impulse. So we'll have to look at that to see, once this correction is complete, what is the preceding impulse and where's our upside target on that. So not a great looking trade long or short up here. Great looking trade short for this one, great looking long for this one, and then obviously a really good looking short to the downside when that plays out. So keeping a close eye on gold, seeing how things play out moving forward. Looking at copper, we're just looking like we're correcting for more upside. But let's take a look at the higher time frames. Higher time frames, we've reached our minimum target. So this could be a good indication of where we're headed, because copper is a great indication of what the greater economy and what the broader resource market is going to be looking like. So as you know, zooming out all the way, we're looking for this impulse down. We're going into this correction and a continuation impulse to the downside. We're busy trading the C wave to the upside, and we've hit the minimum targets. And looks like we're going to continue up into the median and full targets of kind of 3.3. I suspect we're going to go break the highs here at 3.33. So going into the lower time frames, we see we've gone into this kind of corrective structure. Let's go into the 4 hour, because that's where it really lines up. As you can see, we have this impulse down, impulse up. We're going into this choppy wave. I think all of this is just going to play out as a complex correction. We're going to see a push higher to match this one. And then we need a wave lower to match this one. And from there, continuation to the upside. So keep an eye on this for what the basically precious metals are going to be doing over the next kind of week or two. They're just correcting for now, it looks like, for more upside and more dollar weakness. And that matches this temporary dollar strength followed by a dollar weakness moving forward. So keep an eye on that. Palladium, we had a strong move down. We were looking at a short palladium because, as you can see, the higher time frames suggest, let's just redraw this, showing what we're looking at on the higher time frames. We have this strong move lower, this one here. We then go into correction, impulse up, initial corrective impulse. So we're looking at this as a corrective structure. Zooming in, you see what we're looking at is a push lower, then we go into this corrective structure here. This is your central kind of expanding flat B wave. And now we're looking to trade this wave to the downside. We've got a really strong impulse from the highs, and we've gone into correction for that on the lower time frames. So we'll be looking at, you could probably trade this as a bit of a flag pattern. So entry order below the lows gives you a fairly decent risk reward. I think you'll get 2-to-1 out of this moving forward. Then we're looking for our C wave to the upside to complete our correction, wherever that occurs. Maybe we get this extended move to the downside. That's why this trade is worth taking. We go and break these lows, then we see a push higher, and then it's continuation to the downside. So Palladium's one to watch for a series of some really good looking trades. Basically a series of C wave trades, C wave down, C wave up, and then continuation down. So some really good looking trades, one to look out for, definitely one on our watch list. Platinum, been a real pain to trade. Higher time frames, still that same clean picture where we have this impulse up, choppy corrective price action down, and we're looking for an impulse up, minimum one, kind of 1290. Definitely call it a 1,300 minimum upside target, and full side upside target of around about 1,750. Lower time frames have been a pain. It's just been a really choppy mess. We had a fairly decent move up, and then from here on, it's just been this really nightmarish corrective structure. If we look at it as an ABC, this is your A wave. We go into an extended B wave. We have touched down on the full target, calling this a running flat. That being said, it's an absolute mess, and it's really a really terrible structure. Looking at to trade this, there was a decent looking trade here as a kind of triangle / flag. but we're kind of in the danger zone now. If we can look at this as an initial impulse triangle and an impulse up, it's a bit of a dangerous area. So ideally you want to see maybe another corrective structure that looks a bit like this, and then trade that to the long side. So keep an eye on this one. Obviously, there's still the danger that from here we're going to come lower to complete this corrective structure in a more clean manner, where we can see a retest of this kind of trend line and then see a push higher, and that matches the temporary dollar strength. So I'll really only be looking to get excited about trading this to the long side if we drop down into this 840, 850 region. Euro Oz, longer term, interesting trade. Obviously, we're looking to trade this impulse correction, impulse to the downside, which we're looking at here. Much higher time frames. As you can see, it's this corresponding wave that we're trading at the moment. Impulse down, choppy corrective price action, and impulse down. So really nice risk reward to this if you can find an entry. As you can see, we've had this nice impulse to the downside, and we've gone into a fairly decent drawn out correction here. In terms of time of correction, not quite where we want it to be, but getting close. So interesting to see what happens here. Are we going to turn from this region and move to the downside? As you can see, if we're trading this as an ABC correction, we have touched on our 0.786 region and looking to turn from there. If we can go into a bit more of a drawn out correction where all of this becomes a bit of a running flat, we see a little push higher and then another push lower and then a decent push higher, we might kind of push towards that minimum target line of length of correction before we see downside. So ideally, that's what we're looking to get, because that just cements the fact that the trade to the downside is this impulse. And we could see that occur. But at the same time, it might not be that. We might just see a impulse up, choppy corrective price action, impulse into this region, and just fall from here, from where we are right now. So we'll have to keep a close eye on this for a decent fall to the downside and a decent correction to get short. So we'll be keeping an eye on this one. Euro New Zealand kind of matches this picture and has gone a lot longer. It's gone a lot more. Looking at the higher time frames on Euro New Zealand, it's a bit of a different picture, kind of like the Euro USD. So we might see some New Zealand strength moving forward, or some New Zealand weakness moving forward compared to the Aussie, because of the kind of other pairs that are showing us. But for now, we're just trading this structure: impulse up, choppy corrective, or impulse down, which is our initial corrective impulse, choppy corrective price action up, and now we've had this impulse down. We've reached our minimum target level on this down impulse, but I suspect we're just in correction for more downside towards maybe 155. Obviously, this could go down into an extended wave down towards 140, but for now, we're looking for a short trade, especially given the lower time frames. If we zoom in, and you can see that quite clearly what we have is this impulse up, choppy corrective price action, and it's gone into a bit of an expanding triangle, expanding flat, my apologies. And we haven't quite reached our target level. So for this to really get to that full target level, we would have to see another drawn out corrective phase, then one last push higher, maybe a double top in this region, and then this continuation to the downside. So it's kind of same story. We could see a fall from here, but ideally we want to see a more drawn out correction, double top in this region, and then a fall from there, because that gives us this correction as a higher degree correction for this impulse. So we'll see how things play out. Either way, we want to get short Euro New Zealand. We'll keep that on our watch list. Euro CAD is a bit of a mess. Higher degree is pretty decent. We're looking at this as an impulse up correction for more upside to come. And if this is playing out as a really messy ABC, there's a decent short trade. I just don't like the price structure, so I'm going to wait for this to come down to this 1.5 region to confirm all of this was an ABC, and then trade this to the upside, because obviously what we're looking at is a really nice impulse, a nice corrective structure, and then an impulse to the upside if it plays out. So this is going to sit on the back burner for now. Euro Swiss has been a real nightmare for us. Higher time frames, there's nothing, just no clear picture as to what we're doing. We were looking to trade a bit of a breakout from here, and we were looking to trade all of this as a corrective structure, but it's just been an absolute mess. So considering what it's doing, I think what we're looking at is potentially all of this is an A wave down, and now we're in a B wave, and we're going to see a C wave moving forward. So I'm going to stay on the back burner for this one and just see how things develop. Euro pound, similar situation. What we had was impulse correction, impulse complete structure, and then we went into this really strong impulse to the downside, which is either an A wave or its initial corrective impulse. Looking at how things playing out, it looks like this was an A wave to the downside. And what we're looking at is now the B wave and a C wave to come down the road. I was looking for this to be an impulse up, choppy or fairly decent flat pattern, nice running flat, and then continuation impulse up, but that's just died off. So obviously this could all just be part of a choppy impulse up. We might see price turn around here and then push higher and then kind of complete our B wave that we're looking at. We just have to see, give this time to develop. Otherwise, nothing really to trade in there. Euro yen looks good for a trade to the downside if we can just get that trade that we were looking for, looking to get that C wave momentum to the downside. Higher time frames, really clean picture. We have an impulse up, an impulse down, which for now I'm going to be calling an A wave. Then we're going into this choppy corrective B wave, and then continuation C wave to the downside. So we're looking to trade the C of B to the upside. As you can see, we've broken out of this trend line, which is a good indication that we've broken up, and especially looking at the characteristics of this impulse, it really looks like the beginning of a C wave impulse to the upside. We've then gone into this corrective structure, which is really what we're looking to trade here. We're looking to trade this C wave to the downside if we can find a clean entry. So we're waiting for things to break here. We're waiting for an indication that we've turned, and it just, every time it looks like it's turned, it's just chopped higher. So for now, we're going to have to trade this as a pattern, as a corrective structure. So we're looking for Euro yen to come up, break these highs, and then look for a turn to the downside. So very difficult to get the end of a B wave at times, but at the same time, if we can get the C wave, there's a really good trade to the downside, and then a really good looking trade to the upside. So we'll definitely be keeping an eye on this for an entry. If we miss the short, no problem. The long trade is really one to look for. As you can see, when we zoom out to the higher time frames, it could be a really nice move from kind of 120 all the way up to 136. So we'll be keeping an eye on this. And this is kind of congruent with the continued euro strength against the dollar, where we want to see the euro push higher. And then following that euro strength higher, we see the dollar take over and euro weakness kick in for continuation to the downside. So we'll definitely be keeping an eye on this one for a nice long trade, short trade, long trade, short trade, some really good trading on euro yen over kind of the next year, 2 years even, moving forward. Pound Oz, interesting looking chart. As you can see, we have this strong impulse to the downside, fairly choppy impulse up, and we go into what looks like an ABCDE expanding triangle for a secondary impulse to the upside, which is like the C of B that we're looking at. This is all just a higher degree A, B, C that we're looking at. So C of B after an expanding triangle, really good looking trade. And as you can see, this impulse is quite a choppy one, so we can expect a strong move higher, pound against the Oz. So zooming in, we've had a really strong move off the lows, very much an impulse. So what we're looking for is a fairly decent correction, and we're looking to get long pound Oz to the upside. Definitely want to look for just early days. We need to wait a couple of days, maybe weeks, to see this correction form and then get long. Pound CAD. Pound CAD, we're sitting on the sidelines just because it's such a mess at the moment. Not really even going to get into it. Basically, looking at this impulse, looking at this complex correction that we looked at in the lessons, and we're just trying to see what comes of this. It looked like at a while, it looked like we were seeing the start of the C wave continuation to the downside, and then we just went straight away into this big corrective structure. So we've had this impulse up, we've had a choppy corrective price action, and we've had this impulse up. So it's worth looking for the short trade to the downside, because this is the impulse that we look to be correcting. It's either corrective or continuation of the much bigger picture. So it's one to keep an eye on. I just don't see why the pound CAD would be falling when the pound Oz would be rallying. So it's a bit of a mixed bag at the moment. We'll have to see how things play out. But look for a pound CAD short here. We'll actually put this on our watch list for some shorter term trading to see how things play out. Pound Swiss, we're looking for pound strength, looking to get long the pound. We had this impulse up. We went into this expanding triangle. Really pretty much a mess, but it did give us good indication that we were going to continue to the upside, and we have seen that continuation. It's heading into a bit of a dangerous area, given this is our impulse. It's a fairly decent sized correction, and now we have a second impulse up. Higher time frame, much cleaner picture, very similar to pound dollar, where we had this impulse up, kind of choppy corrective price action, B wave, and now we're looking for the C wave, and we're very much nowhere near our minimum targets yet. So looking for some Swiss weakness and tie that in with the pound strength, and we could see a nice move higher. So looking for any short-term corrections, anything that looks like this is worth trading to the upside. So keep trading longs on the pound Swiss. Pound yen, same situation really, higher time frame, same story, impulse up, choppy corrective price action, trading the C wave to the upside. When you measure our minimum targets, we haven't reached them yet for the yen either. So US dollars reached them, yen and Swiss still have some room to run. So looking for longs on both the pound yen and pound Swiss. Lower degree time frames, we've obviously come a long way. We need to see a decent sized correction, maybe something along these lines in this region would be worth getting long. So keep an eye on that as potential long trade. Pound New Zealand, very similar to pound Oz. Looking at the higher time frames, you see we have this impulse down, we have a small impulse up. We go into a really choppy corrective structure, which looks a lot like a B wave. And then we are looking to trade this impulse to the upside. Pound against New Zealand, we have a really strong impulse off the lows here. Really nice trade. So what we're looking for is the same story as the pound Oz, looking for a decent sized correction for that continuation impulse to the upside. Keeping an eye on that one. Aussie dollar CAD, absolute mess on the higher time frames, not even worth looking at, but strong impulse to the upside. We're looking for a big correction for continuation. So nothing really there for us for now. Aussie dollar yen, higher time frame structure looks really good for continuation of kind of risk off reflation trade to the upside. So we want to see a push towards at least 91.50 on the Aussie dollar. So definitely looking for long trades. We are actually short for a shorter term trade here for this structure, impulse down, choppy corrective price action, looking to trade this as a C wave to the downside. Still a decent looking trade if you can get into this structure. As you can see on the lower time frames, we have a really nice impulse to the downside. It's an expanding triangle or expanding flat, depending how this plays out. And then you want to see continuation to the downside to complete our C wave. So if you can get a decent entry, this is a nice short-term Aussie dollar yen short into kind of the 73 to 72 region. And then from there, you obviously want to get long for continuation to the upside. So we'll put that on our list. Aussie dollar Swiss, same situation. Higher time frame is pretty much the same. We're looking to get long, and we're looking for continuation following this correction. Lower degree, the short was there, but it's kind of moved on. There's a decent looking running flat that's forming here. So if you want to take this to the downside, you just need to keep your stops really tight, because we're looking for continuation following this A, B, C structure. So rather look for longs in this region than look to get short this, especially if you're going short Aussie dollar yen or are short Aussie dollar yen like we are. Oz New Zealand, higher time frames suggest more upside for the Aussie following this corrective structure. We see we have this impulse, long drawn out choppy corrective price action, and we're trading this impulse to the upside to complete the C wave. Then on the lower degree time frames, as you can see, we've had a nice impulse up from the lows, and we've gone into this corrective structure. We were looking to trade this to the downside. It was a good opportunity. It was a good trade in my book. I think we got short in around about this region. We probably should have taken break even on it. Ended up taking a small loss because I was away from my computer, but nothing wrong with it. I think it was a good trade where we had this impulse down. We had this choppy corrective price action in this region. And then we had a continuation impulse down following a kind of touching of our minimum area for continuation to the downside. So it was a good trade, but it looks like it's developing into a kind of ABC correction, looking for choppy corrective price action. There's a good looking short trade to the downside from this region, because this is a very choppy A wave. So expect a strong move down, Aussie against New Zealand, and then continuation to the upside targets of kind of 1.11 to 1.14. So definitely, if you miss the short, you want to get long this towards the kind of end of the month, maybe middle to end of the month on this one. New Zealand yen, similar situation as Aussie yen. Impulse to the upside, we've looked for this corrective structure, which is playing out nicely, and continuation to the upside moving forward. Higher degree time frame is a bit different. We are trading this corrective structure here, and we've definitely reached our minimum target level of the 0.786. So looking like a small correction for more upside towards 74, maybe higher to become an expanding. But generally speaking, still looking for that downside. Again, New Zealand looking weaker against the Oz on the higher time frame, on the other pairs. So interesting and something to take note of. You definitely want to get short the New Zealand in this region. Aussie dollar Swiss, higher degree time frames. There's really not much to be looking at. Lower degree, we are looking at a decent correction. Nice decent corrective structure to the downside. We've already covered this. Swiss yen. Looking for the Swiss to kind of be overshadowed by the yen in this region. If you look at it, we're looking at this impulse down. I'm looking at this as an A wave, and then we're going into this impulse corrective structure, impulse to the downside, and that's going to be your B wave with a C wave down the road. So we could see a really strong move to the downside with Swiss versus the yen. So this is definitely a short trade I've been alluding to for a while. I took some losses in this region trying to get it, just keep chopping higher. But the structure suggests we've approached a region where we want to be looking to get short. If we're looking at this as an A wave, a choppy corrective B wave down, we are definitely at that 1-to-1 region where we want to trade this continuation to the downside, basically this impulse to the downside. So We're keeping an eye on this one to find a nice short trade. So impulse down, look for a decent sized correction, which we may be getting right now actually. If you look on the lower time frames, we have a fairly decent impulse to the downside, and we've gone into a bit of a correction here. So if this correction plays out for us, you definitely want to get short the Swiss yen heading into basically the rest of the month, something you want to hold on to for a little while. So we'll definitely be keeping an eye on that. Oil, we're just going to go into UK oil because the pictures are pretty much the same, just the UK is giving us a cleaner picture. We're looking for this corrective price structure to play out. Impulse up, and a nice long complex drawn out running flat looks to be forming. At the moment, we're looking at the phase of this impulse up, then we're looking to get short down towards the 40 region, and that's going to complete this entire long drawn out running flat to continue up from here. So it's a really nice impulse to follow up towards kind of 56, 60, $70, that region. So a really nice trade from 40 up to 60 down the road. So once this correction completes, we definitely want to be long. Meanwhile, there's some decent looking short trades from around about 46 to 48 region. So keep an eye on this one moving forward. But definitely heading into the middle end of the month, we want to get long oil and hold on to that one for a little while. Really nice looking trade. S&P, simplification of this is basically we have this wedge forming and we're looking to see a break of this wedge to the downside. Cleaning up the structure, we are still trading this A wave that we saw on the lower time frames. Impulse down, choppy corrective price action up. This B wave has just been an absolute mess. So every new high we make becomes an area of interest to trade this wave to the downside. So it's caught us out a couple times. I've switched to just trading puts, kind of 3,000 puts, 2,900 puts will really pay off for you because you can just hold on to them and wait for this move to come. I really believe this move is going to come at some point, and it's only a matter of time before it occurs. As you can see, looking at the MACD, we're just seeing continued weakness on the MACD, continued MACD divergence heading up into this. So keep an eye on this trend line to break to the downside. Keep an eye on this trend line at the top to be a kind of resistance area and could be a nice entry point for a risky short trade. Like I said, I'm just looking to trade my puts. I'm holding on to my puts, waiting for this trade to play out. NASDAQ is just kind of on the run. It's been on the run for a while. As you look on the dailies, we've just continued to the upside the whole way without any correction on the dailies. So at some point, we need to see this correct or flat out turn to the downside. So for now, it's just running away from this, something that really isn't worth trading, in my opinion, unless you want to be risky and trade any continuation corrections that look like this. We got one that looks like that. It wasn't a great structure. And every time you're taking these structures from here on out, it just gets riskier and riskier for a big turn to the downside. So in my opinion, tech is not the place to be. The Dow, same structure as the S&P really. We had this big move to the downside, and we are looking to trade this C wave to the downside. Interesting to see if we do manage to push higher and break these highs. Interesting to see if this in fact was our top in the Dow, and we've just gone into a bit of a running flat here, and then we're going to see continuation to the downside. So if you want to play it, entry order below the lows for now is fine. Your stop loss will be kind of in this region. You'll get a decent maybe 2-to-1 trade out of it. Nothing great there for me. US 2000, exactly the same situation. A wave to the downside, choppy corrective price action to the upside. We're just waiting for a C wave to the downside and continuation from there. US 10-year, it's been interesting that we've seen the US 10-year basically chopping lower, showing risk off on the table while the S&P chops higher. I think we're just going to see continued chop lower in the 10-year as risk goes off the table. And I think we're going to see a big, strong push higher as a kind of new stimulus package gets announced. So keep an eye on that. DAX, same situation as S&P, except this C wave looks to be playing out and looks to have played out actually. As you can see, we had this move lower, and we had a C wave that went to touch our 0.786 region as a flat pattern. So, and we've had a pretty strong rally from this region. So no real shorts in it. If you get a decent correction for more upside, you want to get long the DAX because this is a nice running flat correction for more upside. There's obviously the chance that this C wave isn't complete and we see a retest of the lows. So you have to wait for the correction before you trade long to the upside. Same with Euro equities. We've come enough to complete the structure for continuation to the upside. Same with the Oz. We've come and we've touched the minimums for all of this to be a corrective structure, kind of running flat for more upside. So you have to be patient. It's a very strong move. So hopefully we get a decent looking correction. Something along the lines of, say, this, just in the opposite direction, just a small hourly running flat, and you want to get long to the upside on Aussie equity. But like I said, generally speaking, equities globally aren't a great picture. If you were to get long equities, the Aussie is the best picture for me in terms of Aussie equities, because looking at the higher time frame, you see we've done enough for this to be considered a running flat for continuation to the upside. And with the Aussie currency looking to rally, it looks like it's definitely something you want to be in moving forward compared to other equities. Just look for a decent entry and then get long Aussie equities above all else. Yen, same story. All the equities have basically finished this running flat for continuation to the upside. They just have limited upside, in my opinion. Again, maybe the Nikkei, Japanese equity is not a bad place to be in consideration to the other ones. So just look at this as a potential. No, it didn't reach our minimum. So it's a lower degree correction. Again, limited upside. So trade with caution. Shanghai Composite. I'm rather going to look at EEM. You can look at Shanghai on your own time, but EEM looks to be breaking higher, which is obviously a good indication that the Shanghai, the Chinese index, wants to head higher. We want to see it. We've seen this kind of ABCDE correction and looks like we're breaking higher out of the structure, which is a good indication for emerging market equities. And this EEM is basically made up of a lot of Chinese equities. So China, if you're going into equities, China is a good place to be. Nifty also breaking higher after a long drawn-out running flat. So I'd like to get long Indian equities. If we see this play out, this could be a really nice trade in terms of equities. Turning this into a C wave of a nice long drawn-out running flat, continuation to the upside. This is one you want to get long if this does play out. We have to see how things go. It might be a tricky entry, but the Nifty Indian equity is a good place to be. Moving ahead to, let's just check the US dollar ZAR. It's a nice looking trade. We've had this impulse correction, impulse structure, and looking at the lower time frames, we have reached our median target for a potential trade to the short side, because what we're looking at on the higher time frames is a continuation of that dollar weakness like we've been looking for. So we want to see minimum downside target 1580, 1455 is a big region for me for the ZAR, and full downside target 1355. So if you can find a good entry here, it's a good short US dollar ZAR. Obviously, the danger is what we're looking at here is just a little bit more of a correction for continuation to the upside. So basically, we're looking for that turn. I think we're going to see a bit more of a push higher, maybe up even into the 18s to become an extended wave. That's just a gut feeling I have. But obviously, we've reached our minimum targets already. and we'll be keeping an eye on a turnaround to get short in this region. 17.55, maybe as high as 18 to get short US dollars are continued dollar weakness moving forward. Kind of similar situation for the Mexican. Singapore dollar needs to push higher. Mexican still has some upside to go. So it's similar for emerging market and equities. Moving to Bitcoin, obviously we've had our break from this triangular pattern, and we are nowhere near our minimum targets just yet. So zooming out, what we're trading is this impulse correction, impulse structure to the upside. Zooming in, we're looking to trade this impulse correction, impulse structure. So if that's the case, our minimum upside target for this breakout is 12,687. More likely we're going to head up to 1,500. So all we're looking at now is a decent sized correction in this region on Bitcoin, and then more longs. I'm already long from around about the 9,000 region. Definitely just going to hold my trade for continuation to the upside. Bigger picture, and why I think we're seeing US dollar weakness before the big turn in that US dollar strength that we're looking for, is this whole A, B, C structure. So keep an eye on this one, because Bitcoin could see another dip below kind of 3,000 before things turn around. We'll be keeping an eye on this one, where exactly the high is, to take note of where we're going to see the next turnaround to the downside, the next dump, Bitcoin dump, and if that's going to occur. I think it is, but we'll have to see how things play out moving forward. Ethereum, same picture, just looking for longs. Ethereum is a bit of a danger because we have reached our minimum target, or even full targets of this trade, impulse correction, impulse. So you have to keep an eye on Ethereum as to where to from here. Obviously, this could become an extended wave up towards 600 before we see a pull back. It's the same structure, really. We're just trading this big flat pattern. A, B, C to the downside. So Ethereum could be a great buy, kind of under $100 if this whole structure plays out for us. XRP, same situation, really pushing higher before a push lower. XRP has been a real difficult thing to trade lately. Just the corrections have been a real nightmare to really find some structure in. I like to use the line chart on this, and if that's the case, we have this impulse up, choppy corrective price action down, and now we're trading the secondary impulse up. So 35 to 50 cents is a real danger for a big turnaround in Ripple to the downside. And that kind of is matched by the Ripple Bitcoin chart, where we have this push higher, choppy corrective price action, and it's just a corrective move for Ripple for more downside down the road. Also approaching its minimum/maximum targets for all of this, just to be a running flat to the downside. So if you're long Ripple, be wary of this region. I would much rather be in Bitcoin moving into kind of this month and maybe the next few months. And that's it. That's our charts. Trades to look for: long oil, I really like towards kind of the middle of the month. Great looking trade. Swiss yen short, great looking trade, great risk reward. US dollar CAD short term, great looking trade, and then longer term, US dollar CAD long short term, great looking trade, and a short trade after that, kind of heading into the second, third week of the month, great looking trade. US dollar yen, nice short, depending where we hit to the upside. Good looking trade. Want to see what gold does, because there's some good looking trades in gold. I just think we need to be patient with gold for now and wait for price action to give us a clear indication of where it wants to head. Platinum, if you can get in, good looking trade. And obviously these Euro, Oz, Euro, New Zealand short trades are great. We just might need to be patient moving forward. Pound Oz, Pound New Zealand, great looking trades in terms of upside potential if that bigger, higher degree structure plays out. So keep an eye on those. Generally, the pound is looking strong. Pound Swiss, Pound Yen also looking like it wants to continue to the upside. Aussie Dollar Yen also good looking short, but generally speaking, the longer term trade is where you want to be. So yeah, great looking trades moving forward. And like I said, this kind of area of consolidation is coming to an end. So we're moving into an era of some great looking C wave and continuation trades moving forward. So keep an eye on those, and we'll see you in the trading room. We'll see you in the Traders Corner for updates. So keep an eye on that, and yeah, some good looking profits to be made moving forward. So cool, guys. We'll see you then. Have a great month, and here's to continued success for the Seneca Trading Group.